Hello, this is James Smith at GannAnalysis.net. Today we're looking at the NSE Nifty 50 index. And if you like this video, give us a like and we'll do more videos. So give us a like and follow us on social media. So if we start from here, October low of 2008, you can see it's sort of found support here and here. So we've caught the trend, but what is that trend? Well, in fact, what we did, price unit of 45, that's the normal slope, sort of a gradual incline. And you can argue with me that that doesn't look like a 45-degree line. That's less important. What we're trying to do is capture the rhythm of the market. So if that is what the market's doing, I make that the 1 by 1 because that's the predominant trend. Now you can see from March of 2020, it started to rally much more quickly, a much steeper line of ascent. What is that line of ascent? Well, it's we're using a 6 by 1, which by definition is 6 times the 1 by 1. So the slope would be 270 points per month instead of 45 points per month. So what we're saying here is there's a relationship geometrically between time and price as the rally progresses. The steeper the line, the less sustainable the rally, but obviously, that's where you make a ton of money. If you can get on board with this rally early on, you will make a lot of money, and basically you don't get out until you take out this line. You can see it gave exact support here, pretty good support. So if we ever break this line at 22,631, that's where the support is in November, then it's likely headed down. Where will it go? Maybe all the way back to the 1 by 1. If this is the end of a bull market rally, you should be expecting a big move down. And like I said, the steeper the line, the less sustainable. When you get into a bubble rally, typically you will rally on a 6 by 1 or an 8 by 1. You will rally. It'll be a much steeper ascent. That's how you know it's a bubble. So it's a parabolic move up, and usually that gives way to a parabolic move down. So again, if you break below 22,631 sometime during the month of November, technically you did monthly close below that level. You could pop below it and come right back up. So you could get, there could be a head fake here. It's never easy trading. I mean, you look here, you popped below it slightly, and then you went right back above it. So you have to give it a bit of a fudge factor. But the point I'm getting across here, you can see it says 80, and here it says 45. Well, all I've done is I've overlaid. See, here it was 45, and you can see it's really not the 45. This is the 45-degree line. This is the 1 by 1. But for simplicity's sake, I just wanted to show you if I were to make this the 1 by 1, 270 points per month, that would be 6 times the slope of this line here. Now, if you're saying, well, if this is 45 degrees, what is this line in degrees? Well, it would be 80.5 degrees. That's all I'm doing. I'm showing you the slope is not a 45-degree line. It's 80 degrees in relation to this line. So just to clarify, I just wanted to show you that so you won't be confused. Now, going back to it, I'm just, for simplicity, I'm going to forget about the 45. This is 80 degrees, but it's a 6 by 1. It's 6 times the slope of the 1 by 1, and we're waiting for that break. When will it bottom? Maybe in March, in sync with the 60-month or 5-year cycle. If it does break below this, the concept is that it's going to sell off, and chances are it'll find support on a Gann cycle. So that could be March of next year, 5 years low to low. Now, Instead of forecasting the market, I would suggest to you that you keep an open mind. If it's bouncing off this line in March, then you know that's probably a low. But keep an open mind. It may not get that low, or it may even go lower. We don't know. We just know that that's a big line of support. If you get down there, watch to see what happens. You might also note that it's 108 weeks, 108 months from this low here. That would be 9 years, 9 times 12, 108 bars, or in this case, months. That's another reason why that could be a low in March. And if we go one more step, we can see that March is also 120 months from this high. So you've got a 60-month cycle on 120. So obviously that's pretty cool. That's what you look for, a pattern that repeats. So every 60 months, you get a change in trend. From the high, you get a low. And then presumably, if you take out the support, then this will be a low. Maybe it doesn't get this low, but some sort of low in March of next year is possible if you take out this support line. What if you don't? If you bounce off this, hey, maybe it's a high. We don't know. That's why with Gann, it's not so much about forecasting, it's being open to what the market gives you. So it's always a matter of time and price. You need to look at both in order to analyze it correctly. If you close below this line, yeah, you should be looking for a low in March. But if you bounce off this line, hey, maybe it's going to be a high in March. We don't know. So keep that in mind. It's not so much about me telling you what the market's going to do. It's me letting you know these are the road signs. These are the things you pay attention to tell you what to pay attention to as the market progresses. Now, one other thing I would point out, if you anchor from this high, you shouldn't just look forward. You should also look backward. So this was a high, this was a low, this was a high. And, if we had more data, maybe there's a low back here somewhere. So the reality is that we want to pay attention to the cycles, especially cycles that are repeating. The Gann cycles, you're familiar, 30, 60, 90, 120, 180, 360. Those are some big cycles. Also 45, 90, 135, 180, every 45 months, every 45 weeks, every 45 days. On all time frames, 45, 90, 180, those are big cycles. So if you get a cycle like this one that repeats, that's what you want. You want something that repeats. So if you anchor from a high and you see that this is a low and it happens to be 60 months from that high, then you would automatically look to see what's happening 60 months thereafter, which would be March of 2025. So I hope this has been helpful. I just wanted to give you a quick heads up on the Nifty 50, illustrating what is going to possibly happen in March of 2025. Remember, keep an open mind. If you bounce off this line here, it could be a high. But if you take it out, it could be a low. Nothing is ever guaranteed. We can always say, hey, you can find examples of where it didn't work out the way you expected. But the important thing with Gann is to let the market tell you what it wants to do. And if you're open to time and price setups, you will find a trade. What would really be incredible is if you bounced off this support, the 1x1 line, in sync with the 120 and 60 month cycles due in March, then you'd have a pretty good idea that, hey, it's a buying opportunity, or at the very least, if you're short this whole distance down, you'd be covering your short. And then you'd look for at least a reaction rally, maybe the start of a new rally. So that is, in a nutshell, how you would analyze this. There's a lot more I could say about this market, but these are a couple of easy things to point out. Again, if you like the video, give us a like, follow us on social media, tell your friends. Thanks a lot for your time.